Well, I'm going to go ahead and just start the introduction and welcome you. I am Creson Oakley. I am our business development and financial education specialist for the credit union. I have worked for the credit union for over 30 years. Most of my time has been in the branches as a branch manager. While I was a branch manager, I got to wear a lot of different hats. And one of the hats that I had the most passion in was wearing an underwriter hat, where I was able to look at people's credit and help them structure loans in ways that best suited them. I feel that this is something that is not often shared or taught out in the world. So I hope that I can enlighten you a little bit and give you some additional information. I've got Karen Torres also from the marketing team. She's going to be the moderator. If you have any questions at all, please. Oh, I'm going to wait. And we got somebody else coming in there. Hello. I was just getting ready to say that once I go through the presentation today, I will have time at the end to answer any questions. So if anything pops up and you have a question during my presentation, please feel free to go ahead and write it in the chat, and Karen Torres will go ahead and ask them at the end of the presentation. I am ready to go. I thank you guys for joining us today with this. As I stated a little bit ago, credit is very near and dear to my heart. I feel that not everybody has the same opportunities to get started with it. So I've got a couple more coming in. Okay, so I'm going to go ahead and get started here. Credits. There are 5 C's of credit. I don't know if you've ever heard them, but character, capacity, capital, collateral, and conditions. Those all go into the credit report and credit score. Oh, it looks like we're having trouble allowing somebody to stay in. Okay, I don't deal with technical difficulties, so hopefully we can get them in. Unlocking the credit puzzle, why it matters at every age. So we're going to go ahead and talk a little bit about building credit, protecting credit, possibly rebuilding credit. Okay, that's what's on the game plan for today. Why is credit important? So it used to be, when I was first establishing credit, really, I only thought that banks and car dealerships pulled credit, and that's all you needed it for. Maybe if you bought a house, but I was young and I didn't know about that. Nowadays, there are a lot more people pulling credit. There may be some employers that pull credit. Generally, this is going to be a soft hit, so it's not going to show up as an inquiry on your credit report, and they don't necessarily see your full credit score. They're really looking for identification information on your credit report, possibly payment history, and maybe collection items or judgments, things like that, that could also be on your credit report. They also want to just kind of see it as a credit reference for employers. Generally, if you're going to be working in a situation that you might handle a lot of cash, or you might have types of sensitive private consumer information, they may want to just kind of pull the soft hit to see what your credit is looking like. Opening bank accounts. This is a big thing nowadays. Again, this is a soft hit. It is not going to show in your inquiries, but a lot of banks are required to pull credit. And really what they're looking for mainly is the credit freezes or consumer alerts. When you have any of those on your credit report and a new account is opened or a new loan is granted and you were not verified, those institutions could be at risk of, violating a regulation. So it's requirement. That's really what we're looking for when financial institutions are pulling them. Say you want to buy a business, an existing business, or start a business. When you're starting out, you're going to need to use your personal credit. So you're going to want to have a credit score that is going to let people know that you can run this business. Okay. Also applying for rent. I think that's pretty standard. They are most likely a soft hit also, but again, they're going to be looking if you've had a mortgage out there, if you've paid your bills, things like that. Not necessarily going to see the credit score again, but they're going to look at some information. They're going to see your employer information, make sure it lines up with what you're presenting. And then, of course, the applying for loans and credit lines. This is what makes the most sense. And for a long time, this is really who was pulling them. Somebody that's going to grant you a loan, they're going to want to know, they're going to want to see your credit report and see that you have developed payment histories and things like that in order to grant you loan. So let's go ahead and start building some credit, your credit profile. Okay, I have, okay, so some ways to build your credit. I was very lucky. When I turned 18, my parents opened my checking account, helped me open my checking account, and they co-signed for me to have just an overdraft line of credit tied to that checking account. They wanted to make sure that if I had a bill that needed to be paid and I didn't have enough money, I had a line of credit that would go ahead and help pay that. They did not make any of those payments for me. They just helped me get it. That was up to me to pay. And I knew that if I didn't pay, I was going to impact them. But they helped me build that. I am very aware that not everybody is that lucky. And sometimes people have nobody but themselves to help them start building their credit. There are a few ways that you can do it on your own. If you can apply for a secured credit card or a secured loan, here at the credit union, we offer secured credit cards and loans that you can start building credit. If you have $500, you put it in an account, we freeze that account, you still earn interest, it's still your money, but you start making payments. And as you make the timely payments on it, you can apply after 6 to 12 months to have that line or loan unsecured. So basically, you're showing that I'm borrowing my own money, I'm paying myself back, but you're also building a credit report right there. We do not report our secured credit cards as secured credit cards on your credit report. They will look just like a regular credit card. Some places do report them as secured. We do not. Some, if you don't have the $500 to pledge, you may want to start with a department store credit card. Some of them may give you a very small balance to start. Just be careful with those. Don't get too many of them. But anything that you can start that way will help you. If you have somebody that has a current credit card somewhere and would add you as an authorized signer, maybe, that is a way to possibly build your credit score. It may not build a trade line for you, though, on your credit. So when my kids turned 16, we wanted to make sure that they never ran out of gas, that they were never in a situation where they could not get home because they were out of gas. We had a Texaco card. We got each of them a card when they each turned 16 and gave it to them. I didn't know anything different about it. I didn't know it was going to do anything for their credit. When my son turned 18, I wanted to co-sign for him to start building his credit. And we get the credit report back and he has like almost a 700 credit score. And I was shocked. I didn't know that Texaco reported authorized signers as credit. It was a very pleasant surprise. However, like Clark County Credit Union, if you add somebody as an authorized user on our credit cards, we do allow that. We do not report it on that authorized user's credit though. So you just kind of want to ask if that's the purpose of what you're trying to be added as an authorized user. Getting a cosigner, this one is sometimes tricky. If you have family that, wouldn't mind co-signing for you, it's great. They're basically vouching for you, which is very helpful when you're, starting to build credit. It says that this person believes in me, they think I'll make the payments, and if I don't, for whatever reason, they guarantee that they will make them. Again, usually 6 months, any up to 12 months of payment history is really good indicator, and then you can apply to have that cosigner removed. So they don't have to think that if they're cosigning for a car loan and you've made a year's worth of payments, they don't have to stay on that car loan for the remaining term of the loan. You can refi it at any time. We say at least 6 months of payment to build a good payment pattern, but the longer you can go, the better. So if you can go closer to a year, that's even a better history for you that you're building up. Rent and utility bills. These, I don't know if you guys know that they can be reported and they can help build your credit score. They're really not going to show as a trade line. So they won't show on your credit report necessarily unless you go bad on them. But Experian offers Credit Boost, and you can register your accounts with the utilities or your rent through your checking account. And as long as they can see a monthly regular payment going, this is going to help your credit score. I had an employee that did this. They really were kind of borderline between two different grades of paper, and they wanted a loan. So they did this, and overnight their credit score went up at least 10 points. That's, that can be significant. That could be the difference in 2 percentage points of an interest on a loan that you might be getting, which can affect the actual payment also. So that's a helpful thing if you maybe are starting your credit and just want to kind of help build that score a little bit more. Okay. Like I said, I want to make sure that you all heard. If you have questions, please go ahead and type them in the chat and Karen will ask them. We're going to try to get through my slides first, and I'll try to cover everything, any questions that any of you may have. All right. Okay, so now we've started building our credit profile. So you need to apply for loans to build your credit profile. You want to try to forecast what you're going to need. It's really good if you can try to plan out. If you're driving a 12-year-old vehicle with 200,000 miles on it, odds are you may be needing a new car within the next year or so. So kind of try to plan on that and start saving money, obviously, for a down payment if you can. And then also try not to apply for too much credit all right now. You don't want to open up too much credit at one time, because it's going to look like you won't have had time to prove that you can handle those payments. So if you're looking at getting a car within the next 3 to 6 months or a year, maybe apply now for a credit card or a personal loan if you're trying to build that credit, or a secured loan, but then kind of leave it alone and don't apply for anything else until you get that car. So you can build that payment history on its own. And then, like I said, hopefully you'll have some money to kind of save by the time you need that car. I try to only have Visa or MasterCards. Department store cards, although they might be sometimes easier to get than major credit cards, they come with a lot of higher interest rates and maybe more stipulation on the payments and things like that. So just try not to get too many of those. The major Visa, MasterCard, Discover, American Express, those you can use anywhere. When you get a department store card, generally you can only use it at that store. So you want to kind of limit that. The Visa and MasterCard lines let you, they give you a little bit more flexibility. So now I did say that about department store cards, but please don't think that I don't have any, because they all offer those discounts, especially at the holidays. Oh, apply for our credit card and get 10% off your purchase or whatever. Well, there are times where, you know what, I know I'm going to be shopping at Home Goods and I'm going to buy quite a bit of my gifts there. You know what? Getting 10% off might be pretty helpful for me. So each holiday season, I may allow myself to apply for one department store card. Very important though, I save up my money, I put my money aside, and I pay that off when I get the first bill. I don't want that interest building up on me. I one time had a consumer alert on my credit report, and I was at Home Goods, and I was like, oh yeah, I'll get that credit card. And they went, and I forgot that I had the consumer alert on it. And then they said, oh, I'm sorry, but something's come back. You'll get notification in the mail in about 2 weeks of why we weren't able to open it. But I'll still give you the discount today. Because I went ahead and applied, they went ahead and gave me the discount. And then I got the letter in the mail, and I had forgotten to unlock my consumer alert. But so there's tricks to that. But the one thing you really want to make sure is the interest rate on those department store cards can be astronomical, honestly. And if you end up taking, say, 5 or 6 months to pay off what you had shopped for, you might actually pay more, 3 times more than what your discount was on what you saved. So just kind of keep that in mind. You want to limit the applications that you're doing. Too many applications at one time does make it look like you're, opening lines that you haven't established yet. So you want to be careful with that. I have seen members come in. When I was an underwriter, I would see some names that would come in regularly every 6 to 12 months, whether it was paying their car insurance, lump at a time, or their car registration or whatever. And it was like clockwork. Every 6 to 12 months, they were applying for a new personal loan. They didn't trust themselves with a credit card. And credit cards can be scary if you don't use them correctly. But these members, when they're applying every 6 to 12 months, granted, it's not immediate credit pulls that are hurting them, but it really is halting their credit score from improving as much as it could, because a new hard pull is coming every 6 to 12 months. What I would sometimes counsel these people with is, you know what, let's get you a credit card. Maybe the first couple times they do a personal loan, it's a little bit easier to get approved for a personal loan than a line of credit. But once you've gotten that payment history down, let's get you a credit card that's maybe twice what you usually need for that personal loan. That way, in 6 months, when you need to pay that insurance again, you have that available on your credit card. You don't have to come back to us and ask us to grant you a new loan. We don't have to pull new credit for you. It's going to be better in the long run because you'll have fewer inquiries down the road, okay? Just make sure that when you do have credit cards, you're keeping the utilization of the lines under 35% of the available balance. Now, that doesn't mean have 5 different credit cards and, well, what it means basically is you take the total limits of all of your credit cards, and whatever you owe on them, keep it at about 35% or less than the total available. So you might have one that is a little bit closer to the limit, and then you have a few that maybe don't have a balance on them or anything. Those will equal each other out and average out between them. So 35% of the available balance is really good. One thing that used to be big when I was establishing credit, man, it's funny to think how credit has changed over the years. But when I was early on establishing, we were told you need to carry a balance on your credit cards to really build your credit. And that is not a thing. That is not a thing anymore. And if anybody tells you that, that's not. You need to show the payment history. So really, when people start getting credit, one of my big things that I tell them is try not to use it other than maybe get a tank of gas once a month. something that you know you could pay off the next month. It's not going to break you. That way you're building that payment history. Now, if you get a card and you never ever use it, you're not building any kind of credit history. But if you use it for minimal purchases that you can pay off the next month, you are showing a payment pattern, and that is going to start building your credit. Okay. You should never have to pay interest or finance charges to build your credit, which is different from my day. You also want to make sure that you're paying them back on time. This is the biggest impact on overall credit score, is your payment history. So you want to make sure that if something has come up and maybe you used a little bit more than you had wanted or planned to, but it's coming up to the due date and you really wanted to pay half of it down, but you don't have it yet, at least make the minimum payment by the due date, because you would rather make a minimum payment, have a little bit more higher balance when that cycles through, than have a missed payment but pay half of it down a little bit late. The building of the score is kind of funny with the way that different things reflect differently, but the payment history is the biggest factor in determining your credit score. So now we're going to build your score, and once you've got it started, like I said, payment history is the biggest. I believe it's like 35 to 40% of your overall credit score. Okay. Capacity, or the amount owed versus the credit limits on your card, that is the next biggest factor in your credit score. And then they also want to look at types of credit used. Do you only have credit cards? And if you only have credit cards, it does look a little bit at that capacity, but it's going to score a little bit differently if only credit cards are used versus maybe having a credit card and a car loan, or a credit card and a student loan. Those are two different types of credit that is showing a good, well-rounded credit report being established. The length of credit history versus new credit opened. This is why you don't want to go and open 5 different credit cards at one time. You want to kind of stagger them, and you want to have your oldest trade lines that you've opened. You want to keep those opened. You pay them off, that's great. Some people think, oh, I paid them off, I'm going to go ahead and close that card because I don't want to use it anymore. I do not, please don't do that. Unless they're going to charge you an annual fee, because I don't believe in paying for annual fees on credit cards. Just go ahead and pay it off and leave it. Some people find it hard to have a paid off credit card and not use it. And I've heard of all kinds of things. Some people lock their cards in a safe. Some people put them in a safe deposit box. Some people have even frozen them. They put their cards in the freezer, they freeze them in a block of ice or whatever so that they can't use them. Whatever it takes to be able to do that, it's great. If you can have your longest trade history paid off but still open, it's going to show better on your credit report and your credit score. So I really encourage you not to close any cards that you pay off, unless, like I said, if there's a fee or something they're going to start doing. Now, there are going to be some department stores and some creditors that if you don't use it within 12 months or so, some maybe more, they might close it against you. That's sometimes you can't help that. What I generally do is I do have about 4 or 5 different major credit cards. I don't use them, but I will use them once a year just to kind of keep them fresh, keep them in my credit profile, keep my credit being updated accurately. And then also you want to, when you're building your credit score, you want to review your credit report. I hope that you all know that it is, everyone is allowed to get at least 1 free credit report from the credit bureaus per year. And I highly encourage you to look at it. You can go through the credit reporting agencies and request it. I believe if you've ever been denied for a loan, also you can reach out and get it because maybe something's reporting that you're not aware of that would have gotten you that decline. But regularly review of it. Some people do like the Credit Karma, or they do different things, and they maybe pay for credit monitoring. The credit union has two different checking accounts. If you're aware or not, I don't know, but they are the bonus checking and the bonus checking plus accounts. Those both come with a very small monthly service charge, but included in that service charge, you get free credit report monitoring and you get identity theft protection, along with many other benefits that come with them. But if you're paying for any of those things, look into our checking accounts, because we're probably going to charge you less than what you're paying for things. Generally, when you get your annual credit report, also, it's not the full picture. It may be like a summary of certain things, and it might show your payment history, but it generally does not. I don't know that it shows the accurate credit score. Or I just want you to be aware of all of the options out there for the credit, and to be reviewing it. I look at ours through my bonus checking account, and I get a notification every single month. Your updated credit report is available to look. We only do pull the information twice a year, every 6 months. But if something has changed on my credit, I get a notification. If I've used more than a normal limit on any of my credit cards, I get a notification. If there's somebody trying to open up a line of credit or a loan, I get a notification. So it's very helpful and beneficial, and then I can actually go in and look at my credit report. So those are some things and tips on building your credit score. But something that often isn't talked about is what lowers your credit scores. So missed payments, if you miss one payment, so you're past the due date on just one thing, it can drop your credit score by 70 points. So whereas I had talked about the credit boost can boost you 10 points overnight, one missed payment can drop you 70 points. So making your timely payments is so important. If you have frequent late payments, it's going to affect you more. And then as you get back on track and start paying the payments on time again, the more in the farther away those late payments are, the less they impact your score. So just when you get back on track, just focus on that and keep getting on track. Stay on track with it. If you miss one payment for more than 90 days, which is 3 months of payments, the delinquency reporting on that can damage your credit tremendously. And to dig out from under it, it could take 24 months of on-time payments to counteract the negative effect of that severe late payment. What I am going to encourage is, it happens, life happens. If you have anything like that you can't make payments, reach out to the collections department wherever you are, your loan is with. They want to help you. They don't want to damage your credit, and they're going to work with you as best as they can. It's when people get embarrassed, and that is natural. Don't get embarrassed. Ask for help. The collections people want to help you. Maxed out credit cards, that's another thing. Missed payments and maxed out credit cards, those are the two ways that you can harm your credit score. So maxed out credit cards over 50% can lower your score by 100 points. So make sure that you're trying to keep that capacity. And maybe something comes up and you just can't seem to get it under the 50%. And that 35% is out of sight. You don't see that ever happening. Possibly you could request to have an increase on that credit line so that limit gets boosted a little bit, and then you have a little bit more capacity. If you get up all the way to the maxed out, that's going to get a little bit harder to get additional help from. Okay, so when life does happen, how do you rebuild your credit? Honestly, it's a lot like the starting of building your credit. It's very similar. You do want to create a budget. You've had credit in the past, so you will be able to know kind of what you had been spending, what you will spend. So you want to create a budget. What is your typical output of bills each month, so that you know what you're working with. You again want to regularly review that credit report and dispute any inaccuracies. There might not be inaccuracies, but know what's on there so that you can get things corrected. Again, pay your bills on time. If you need to set calendar reminders, set the calendar reminders. Me personally, I like to pay my bills through our bill payer site. I like to be in control of my finances. I don't like to let the utility companies come into my account and take the money out. There's a few reasons why on that. If I have control through bill pay, I can go in and generally edit it pretty easily. If I have Nevada NV Energy and they're coming in monthly to debit my account for my bill, I might need to give them 3 to 5 days notice if I need an additional change, or if I need to adjust anything on that payment. When it's on my bill pay, I can pretty much change it and alter it as I need to. So that's just my little 2 cents on that one. But however it works for you to get them regularly reporting or regularly paid. Similar to starting your credit, secured lines are great. Cosigners, whatever you have access to use, they're great ways to start rebuilding again. Maybe you've filed bankruptcy and you have to just wait until the bankruptcy is showing as dismissed or discharged. Once it's discharged, you are eligible to start rebuilding and applying for those secured lines or whatever it takes to start building that credit, however is best for you. And then also ask your financial institution for credit counseling. I am a certified credit counselor. I can help with that. Also, our loan department, they are wonderful, the loan officers. In looking at the big picture, they see your full credit report, they see everything. They may be able to paint a little bit of a different picture than what you thought. Sometimes you come in and you think that you need to apply for something, and there might be a better way to go about it. One time I had a member that she was just getting buried in her credit cards, and she had already filed bankruptcy in the past, and she knew she didn't want to do it again. So she came in and we were talking, and I started talking to her about her vehicle, and she owned the title to her truck. It wasn't a brand new truck. It was maybe 7 years old or whatever, but she had it was worth a lot more than what she owed on her credit cards. So we submitted for a clear title loan on that. We were able to pay off all of her credit cards into one payment with probably 20% of less, or she was probably paying a lot more in interest on her credit cards than what this clear title loan was. I think we had gotten her down to like 6 or 7% for it. It was great. And then she just had one payment. So we paid off all those other bills and she just started paying us. Much lower interest rate than credit cards and easier for her. But it was not anything that she really knew about, so she didn't come in asking for it. It just kind of, in talking to her and finding out her story, we were able to figure out a different way. So just talk to people. Our loan officers are equipped to have all different sorts of options for you that maybe can help you if it's not the way you originally thought. All right. Okay, so we have built our credit score, and now we want to protect it. You've earned your credit score, so now we're going to protect it. And these are the 3 ways that you can protect your credit according to the FTC, or Federal Trade Administration, or Federal Trade Commission, sorry. So you can freeze your credit. And what this does is basically you're assigned a PIN number. And when you want to apply for something, you have to contact the credit bureau, put in your PIN number, and they will remove that freeze temporarily for you. I have never personally done the freeze. I have generally done consumer alerts on my credit report. I like the consumer alert mainly because I don't have to remember a PIN number, because there's enough numbers in my brain going around that I don't want to remember another number. But also the consumer alert, I get a notification. Kind of what I was talking about in the beginning with banks needing to verify if you have any consumer alerts. They're going to call me if somebody's trying to open something. The big thing with those, either way, whether you freeze it or do the consumer alert, you've got to make sure that your contact information is up to date. I cannot tell you, we cannot move forward with an account, a loan, anything, if you have an old phone number on your consumer alert that we're trying to verify. We can't do anything if we can't verify it. And if it's an old cell number, we can't help you. So make sure that you're updating and keeping all of that information accurate. I've seen people get very frustrated, and it's unfortunate, but you put it there to protect yourself. So hands are tied if that isn't set. Because I haven't done the actual freeze myself, I believe there could be some sort of a fee if you need to unlock it for a certain amount of time or a certain amount of times. I'm not exactly sure on that. That's another reason why I do the consumer alerts. I don't like to spend money if I don't have to, if I can protect it and do it another way. Monitoring it, again, regularly, at least one time annually, you want to do it. But like I had mentioned, our bonus checking and bonus plus checking accounts, I can monitor it every month. I also have the identity theft on there. I get notified if my email is on the dark web. There are so many things out there that our small monthly fee is covering. It's really kind of a cool product. And then fix mistakes. If you find an error on your credit report, please report it immediately. Start the process of fixing it. The sooner you start it, the better. It's going to take a little bit of time. It's not an overnight fix. So just be ready for that. And however you start it, whether you start it with whoever's reporting the error or the credit bureau, keep paperwork, keep your documents, keep everything. And I honestly suggest you keep it for several years. You may apply for a mortgage down the road and you think that this is all cleared up. Well, you know what? Mortgage companies, they get a little bit even more in-depth credit report, and there might be something that's still showing on there. So if you can show that, oh no, wait a minute, I disputed this was cleared up, and you have all the documentation to prove it, it's just going to help you then. So save everything. Also, you want to fix the mistakes because they technically could be an indication that your identity has been compromised. If all of a sudden you've lived at the same address for 10 years and you look at your credit report and it shows, my current address is different, you want to look into that. So the best way is to start with the credit bureaus that are reporting it, and then let them dig deeper, do the investigating. They'll reach out to the credit reporting agencies that have reported it. Okay. So now that we've learned how to protect ours, we want to help our family members. Our elderly family members need their credit protected just as much as we do. They've spent a lot of time building their credit, and they're honestly at higher risk. They're at higher risk of identity theft. They're also at higher risk of, somebody using their credit in a bad, a malicious way. They maybe don't need to apply for credit in their age. They maybe own their home or whatever. They're not out getting credit cards, but if they're not monitoring it, somebody could be doing something that they're not aware of and applying for credit in their name. So really, we want to implement the regular monitoring. Everything that you do, you want to help your elderly family do it also. So really we want to educate them. We want to talk with any of the seniors in our family or that are close to your family. Talk to them about the scams that are out there. Seniors are at risk of a lot of the phone scams, email scams, things like that. And it's so unfortunate that the scammers use them that way. But a lot of elderly people that I've seen in the branches that have been victims of any of these scams, they're so embarrassed. They feel they should have known better, and they will argue and they will deny. And it's usually after several minutes of kind of talking to them and asking them other questions that they're like, how do you know that? And then you can say, because this is a common scam that happens. So we just need to let them know the things that are out there. Sign them up for their free credit reports, whether it's through the annual free credit report .gov. I'm going to give you all of the websites at the end, or through our bonus checking accounts. They can get their credit reports also. Schedule account reviews with them. Sit down with them with their bank statements, with their bills, with their checking account or their checkbooks, and go through everything. Just make sure everything looks right. Maybe see if you can schedule an appointment with a rep at one of the branches to make sure if you find any errors or something that you're questioning. You'll always need to take them with you. You can't just go in and ask anything about it, but they do need a little bit extra help. And you can block scammers on their cell phones. This is big because, as we know, they are at risk of those calls coming through. And opt them out of the mailing list. They don't necessarily need all the pre-approved credit card offers that are out there. So there are ways to get them off of those lists. And this is the page that has some of those important information on it. The 3 credit bureaus are right there. You can, most of the time it's easiest if you just go straight to their website to do any reporting or questioning or anything. There are numbers that you can call them at also. And then they each have a separate reporting fraud number also. If you do have fraud or identity theft, you want to contact the FTC. And then the number 5 and 6 there is the opt out of pre-approved credit offers and the do not call registry. Kind of made me laugh when I'm looking at this because the opt out of pre-approved credit offers is a phone number and the do not call registry is a website, but that is the information. Okay, that is the end of my presentation. I think I saw Karen say that we had a question or two.
Hi, yes, we do have a question from Cody.
Okay.
He says, in terms of making payments for credit cards, auto loans, home loans, he heard it is better to make the payment one day before the due date to help boost your credit score. Do you have any feedback on that one, Creson?
I do. Well, okay. Cody, it kind of depends a little bit on, are you looking at before the due date or before they upload the credit file? It's a little bit different. The due date is for a mortgage, let's say, the due date is the 1st, but generally you have a grace period. I suggest that you do it by the due date and not count that grace period. highly suggested there. It's not going to affect your credit, but if you're pushing it and then you hit a bump in the road and you've already pushed it, you could be at risk of going a little bit past that grace period. And then you could see some finance, some penalties or something coming into play. Now, as far as a credit card, I do not encourage that at all. A credit card is generally charged finance charges on the average balance of the previous month. So if you say you bought furniture in September and say you charged $5,000 and now it's not due until today, my payment is due today. I'm going to make the payment so I'm on time, but I'm just going to pay a little bit. Well, I'm being charged interest from when I made that purchase in September all the way through now. If I could have paid a chunk on it earlier in the month, like as soon as I got the bill, then next month when I make a payment, I'm going to be charged on a lesser balance because I made a bigger lump payment earlier in the month. I hope that makes sense. I just don't encourage waiting until the day before a payment is due, really, because I mean, things can happen. I don't know, Monday or Tuesday of this week, a lot of the Amazon products were down and it affected a lot of online apps and different things. And some of them were, payment type of methods. So you just run the risk if you're pushing it until one day before. Does that answer your question, Cody?
He says that before the payment due date.
Yeah. I mean, one day before is better than one day after, but I like to pay it even more than one day ahead.
Yeah, so Cody says that makes sense, and thank you for answering his question.
Oh, good. Sure.
Yeah, I have another one. So for people that filed for bankruptcy, does that stay forever, or how long does it typically take to build a good credit score from scratch?
Generally, okay, positive credit information can stay out there forever. Now, I started my credit journey a long time ago. So some of my earlier things I'm sure are not still reporting because I think I had a Citibank card that had my favorite football team on it when I was in college, and I don't have that card anymore. Haven't had it. When I got married, I got rid of it. So that I'm sure is not still on there. Open lines, though, that are positive information can remain indefinitely forever. Once they're closed, they may fall off. Negative information, bankruptcies, judgments, collection accounts, those can stay on for up to 7 years. So a Chapter 7 bankruptcy can actually show on your credit for up to 10 years. But like I said, once it's discharged, you are eligible to start reapplying and start rebuilding that credit. So that information may be out there, but if the sooner you can start rebuilding the credit, it's not going to that bankruptcy is not going to have as much impact in the long run, because you're going to show, yeah, you know what, something happened, and bankruptcies can be a horrible thing, and they're there for when you need them, but look at what I've done since. So don't be worried if you've had to file and it stays out there. Just because it stays out there doesn't mean that your credit is going to be in the dumper for 10 years. It just means it'll stay on as a reported item.
Okay, I guess for like 10 minutes before 1, so I guess we have another question.
Okay.
I know you talked about consumer alerts. Can you please tell us how to set up consumer alerts and where to get that information, or how does that process look like?
You just go to each, sorry, I keep playing with my mouse there. The consumer alerts, you're going to go to each individual credit bureau and file that, and you can just go to their website. And you're going to put the statement that you want on your consumer alert. And generally it says, I request to be called at this phone number anytime a new account or line of or loan is applied for in my name. And generally the consumer alerts though only stay, I believe 2 years is how long they stay out there. So you do need to update that a little bit more often. If you do the credit freeze, that can stay frozen, I believe, for as long as until you take the freeze off of it. And like I had mentioned, you can unlock that freeze for like 1 day if you know you're going to apply for something, and then the lock will go right back on. But you do need to do any of those that you want to do. You do need to go to each separate credit bureau to file individually on theirs. And the thing is, they share they share payment information and they share dispute type of information amongst the three of them. But when it comes to like the specific consumer alerts and things like that, they don't necessarily share that information. So you want to just kind of secure it. And you don't know what credit bureau different lenders are going to use. We use Experian for our credit bureau. That's where we get our reports from. But you know, if you go to a car dealership or somewhere else and somebody else is pulling your credit, you don't know which credit bureau they're going to use. So if you put it on all of them, you're covering all of your bases there.
Okay, that's great information, Carson. I think we don't have any more questions from the
Okay.
audience, but
Okay.
do you have like one last tip that you can share to everyone?
I just want to thank you guys for taking the time to actually wanting to learn about credit a little bit. My contact information is on the screen now. If you want to reach out to me to discuss anything further in detail, I'm happy to. Be aware of what's on your credit and don't be afraid of credit. Don't be afraid of it. It is a necessary evil. There is very few people that can get through life without ever having to use credit. So it's a necessary thing out there, and it really can be easy to build or rebuild if you're doing it right. It just takes time and some patience. So just stay ready for it, and don't be afraid of it. What we're going to do is we will send out a follow-up email with some notes and the contact information to all of you in the next few days. So I thank you all for joining and hope to hear from you.
Thank you, Carson, and thank you
Thank you.
everyone again for joining. Have a good day.
Bye-bye.